Welcome friends to Excellence Forum's ABCD of Accounting, and we are conducting Income Tax Literacy series. In this series, in our previous video, we saw the provisions relating to determination of residential status of an individual, which is based on number of days he stays in India. In this video, we are going to see the provisions relating to determination of residential status of other persons like HUF, company, etc. So, let's start. Let's start with HUF. HUF can be resident or non-resident. Residential status of HUF is based on the place of management and control. If the control and management of its affairs is wholly or partly situated in India, then it is resident in India. On the other hand, if the control and management of its affairs is wholly situated outside India, then it is non-resident in India. Now friends, in this regard, it is important to understand what is the place of control and management of HUF. In simple words, control and management refers to the decision taken regarding affairs of the HUF. Now, the control and management is said to be situated at the place where decisions regarding its affairs are taken. In short, the place of control and management is a place from where decisions regarding the business of the HUF are taken. Like an individual, resident HUF is also further classified into two categories. The first category is resident but an ordinary resident, and the second category is resident but not ordinary resident. A resident Hindu undivided family is an ordinarily resident in India if the Karta of that family satisfies the two conditions. The first condition is the Karta has been resident in India for at least 2 out of 10 previous years immediately preceding the relevant previous year. And the second condition is the Karta has been present in India for a period of 730 days or more during 7 years immediately preceding the relevant previous year. Now friends, in this regard, there is an important point that needs to be noted. For determining whether HUF is a resident or not, the residential status of Karta for the relevant previous year is of no relevance. But for determining whether HUF is ordinarily resident in India or not, Karta's residential status for the preceding years becomes relevant. So let's go ahead. Now let's go through the provisions relating to a firm and AOP or BOI. A firm and AOP or BOI can either be resident or non-resident. A resident firm, AOP or BOI is not further classified as resident and ordinarily resident or resident but not ordinarily resident. A firm, AOP or BOI is resident if the control and management of its affairs is wholly or partly situated in India, whereas it is not resident if the control and management of its affairs is wholly situated outside India. Moving ahead, let's go through the provisions relating to a company. A company can be either resident or non-resident. Like a firm, a resident company is not further classified as resident and ordinary resident or resident but not ordinary resident. There are two types of company. One is Indian company and another is foreign company. An Indian company is always resident in India. The place of control or management or shareholding pattern of an Indian company is not relevant to decide the residential status. Residential status of a company which is foreign company is decided based on place of effective management. A company can be managed from different places, but there can always be one place of effective management. Place of effective management means a place from where key management or commercial decisions are made. Now friends, if a foreign company has place of effective management situated in India, then it is considered as resident in India. And if the foreign company has place of effective management situated outside India, then it is non-resident in India. These provisions are not applicable to a foreign company whose turnover or gross receipts are less than 50 crores. Let's go ahead. These are the provisions relating to any other persons. We have seen the provisions relating to individual, HUF, firm, AOP or BOI and company, and now these are the provisions for any other person which are not covered earlier. So if a person is resident, if control and management is wholly or partly situated in India, and every other person is non-resident if control or management is wholly situated outside India. So far we have seen the provisions relating to determination of residential status. Now let's understand its relevance to tax incidence. Indian income is always taxable in India irrespective of residential status. It means Indian income will be taxable in the hands of residents as well as non-residents. Foreign income is taxable in India in case of residents and resident and not ordinarily residents. It means a person who is resident and ordinarily resident, his global income will be taxable in India. Foreign income is not taxable in the case of non-residents. Foreign income is taxable in India in case of residents but not ordinarily residents only if it is income from business or profession which is managed from India. Any other foreign income is not taxable in India in case of residents but not ordinarily residents. So friends, let us know how you find this video. I hope this video will be helpful to you. We know that these provisions are a bit complicated, so if you have any queries, please post them in the comment box. Also follow ABCD of Accounting on Facebook and Instagram. For more such videos, please like, share, comment and subscribe to our YouTube channel. Thank you.